Is there a much bigger crash coming to the crypto market? A couple of weeks ago, panic hit the market, which sent Bitcoin's price down to $25,000. However, was this just a warm-up to the main event? Now, last week I covered why Jerome Powell believes a bigger crash is still to come. However, in this video, I wanted to cover why I think this is probably the most likely scenario. Now, not guaranteed, but as we go on, it is becoming more likely. So we'll be looking at why I think a bigger crash is still to come. Then we'll look at 3 great strategies we can use to navigate the potential storm. And then we'll finish up with my own price targets I will be looking for in my own dollar cost averaging plan. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, was Bitcoin's flash crash down to $25,000 the bottom of this crypto winter? Well, unfortunately, I don't think it was, and here's why. Okay, so starting with a concept which I touched on before, but I'll show now a visual, and it is the crack of a whip. Now, when you crack a whip, the top end doesn't move that much, the middle moves a lot more, but it's the end of the whip where you get the vast majority of the volatility. So this would be the crypto market and all small cap innovative stocks. Now, whether in a downturn or upturn, this will move the most. Now, as you go up the whip, this might be your bigger tech stocks before getting to, let's say, the NASDAQ 100, which has been hit, but not as bad. Then we might move up and we'll move into something like the S&P 500, which has been shaken, but nowhere near as bad as the smaller cap stuff. And then the big question is, whose hand is this? Who has the power to drive the markets? Well, the man that can influence the markets is Jerome Powell, head of the central bank. Now, I'm going to try and put in one picture everything that's going on and keep it as simple as possible. So essentially, Jerome Powell has 2 things he can do in his toolkit. First is he can print money and push liquidity into the system. And the second tool is he can influence interest rates. He can raise interest rates or decrease interest rates. And there's 2 main problems that Jerome Powell is always fighting. The first is inflation. We really cannot have the prices of everything going up 10% or 20% every single year. And the other thing he's fighting is that the stock market keeps going up and it doesn't crash, as a lot of the money in the stock market is people's pensions. So we really cannot have a crash in the stock market. And this is also known as the Fed's dilemma, because unfortunately it's incredibly difficult to manage both, as you'll soon see. Now, this is the S&P 500 US stock market going back to 2012, and you can see it's been in an excellent growth channel. So the US economy's been growing very well. 2012 looking good, 2013 looking great, 2014, 2015. It did go sideways for about a year, but then excellent growth. And it begins starting to get more volatile. And then the big event that happened was COVID. And so the stock market went into a free fall and crashed 30% in a matter of a month. And so Jerome Powell had to use one of his levers, which was pumping money in the system to make sure the stock market didn't crash. How do we know he did this? Well, here is the money supply, and as you can see, it was growing steadily, growing steadily. This is the time that COVID happened. And so to stop this crashing, Jerome Powell, there he was, fired up the money supply, and we had a period of printing a serious amount of money. Now, the only problem is, yes, he kept the stock market from crashing, but now the other problem, inflation, because of all the money printing, is now out of control. So now he's firefighting inflation. And what can he do to control inflation? He has to raise interest rates. Now, the only problem is raising interest rates crashes the stock market, as this affects the ability to borrow money, and lots of businesses borrow money to grow. So raising interest rates makes it a lot more expensive to borrow money. So all the businesses that have borrowed money and all the businesses that would like to borrow money, it's now a lot more expensive. So raising interest rates crashes the market. Now, as we'll see in a second, the S&P hasn't crashed right now that much. We're still not in a bear market. So Jay Powell's biggest problem is fighting inflation. But what's going to happen is going to have to keep raising interest rates, and then it's going to crash the stock market even more, which then impacts crypto. So as you can see, this is just one picture of showing you what's going on and the Fed's dilemma. And then essentially why I think a bigger crash to come is because I think the S&P has to come down back into this normal growth channel. And it did briefly come in, but it has now bounced back up. So I do think there's a bigger crash to come. At the end of the whip, crypto will see an even bigger drop. And until there is a much bigger drop in the stock market, Jay Powell will be focusing on managing inflation, meaning he's pulling back on printing money and probably raising interest rates, which will cause a bigger crash in the stock market. So in the midst of all the FUD, and as Jay Powell battles his own dilemma between inflation and the stock market, let's talk about 3 strategies we can use to navigate this potential storm. Now, just know there is no perfect option. There are pros and cons to each, and all we can do is select the best one for our own personal situation. Number 1 is do nothing and come back in 6 to 12 months. Now, whether by choice or simply because you've ran out of money buying the dip that just kept on dipping, a very effective plan is to simply do nothing and come back in 6 to 12 months. Just unplug from all the news and social media, stop checking your portfolio balance, go and live life and come back in a year. And chances are we've probably been through the worst and on our way back up. Number 2 is trade the market. You could try to trade all this volatility. However, the only problem is that 90% of traders will lose money to the top 10% of traders. Now, if trading is your profession and you've done all the courses, you've read all the books, you've done your 10,000 hours to mastery, then trading will be a great option. However, if you're thinking about trading because you simply can't sit still and you feel like you should be doing something, and you might be getting impatient because the crypto market is just not going up, and you may have seen some YouTube videos of people making money in this market, then just be careful, as most inexperienced traders will end up losing even more money. And number 3 is dollar cost averaging. So you probably know by now that dollar cost averaging is a great way to take advantage of a downturn. And this could either be buying in every single month at a set time, or as I do, which is buying in the depth of big flash crashes at certain price points. Now, it sounds easy, but it's actually very hard to do mentally, as you'll probably be losing money straight away, as timing the bottom is virtually impossible. So those are the 3 most common things people will be doing, and as mentioned before, there is no perfect option. It will all just come down to your own personal preference and situation. And so as promised, let's finish up with my own price targets I will be looking for in my own dollar cost averaging plan over the next few months. So let me take you through the price points I will be looking for in my own dollar cost averaging plan. So here is the Bitcoin price. This is where we're at right now. top of the market happened here, and we've crashed all the way down to this 30,000 mark. So I'll talk you through the last buy that I did. So I really wanted to buy sub 30 and get a really good price. And in this flash crash here, which went down to 25, I managed to pull the trigger and buy at 27,000. Now, just note that I actually don't buy Bitcoin. I'm buying Crypto 20, which is an index fund of the top 20 cryptos. But I always use Bitcoin as the price points of where to get in. So for a 30,000 price target, I was very happy with 27,000. Now, the next one that I'm looking for, if we zoom out a bit here, so this is the $20,000 mark, and my next price point will be getting it sub 25. So once it breaks 25, I'm going to pull the trigger at about 23,000. So if I can get a buy-in at 23, I'll be very happy with that. And then the one after that will be sub 20. If it breaks below, maybe we get a flash crash. I'll probably put a buy-in at 17,000. And I'll be very happy if I can get a buy-in at the $17,000 mark. Now, I personally think it's most likely not going to go down to these crazy low 10, 11, 12,000 levels, but I'll reassess if we find ourselves right down here in a couple of months. I'll keep you updated and reassess, because I'll be trying to buy as much of it as I can below 20,000. Now, one of the big things that I'm not doing is checking my portfolio balance, as all that does is make you feel like crap. Now, what is in our control is where we put our focus. So my focus for the next 6 months is trying to buy crypto at the very best price I can, and also trying to help as many people as I can get through this bear market. So there you are, guys. Hope you enjoyed. Now, as mentioned, if you just don't have the funds, or you simply don't want to put any more money in crypto, that's absolutely fine. As always, this is just what I'm doing and why. It is high risk and definitely not suitable for everyone. So for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.